The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 365, NASDAQ up 99, S&P's up 24, gold contract down $13, trading $18.90 an ounce. You get silver off 50 cents, $23.94 an ounce. Light sweet crude, flat, $39.39 a barrel. Notes and bonds. You get the 10-year down 8 ticks, 139.17. The 30-year off a full point at 176.06. And King Dollar. King Dollar's up 168 ticks, trading 94.060. The euro is at 117. The yen is at 105. And the British pound's at 128 to 1 U.S. dollar. Tom O'Brien, what's going on? We just did a round trip on the S&Ps of about 58 points both ways. How's that, huh?
2% down, 2% back up. We're right where we were at the end of the debate last night. We all survived it. Why not? The market maybe letting off a little steam, man, trading higher.
You got to like it. And we just had home sales come in, and they basically blew numbers away. So some of these home builders, folks, you get Lennar breaking topside right now. Bottom line, totally makes sense. I mean, mortgage rates are the least expensive they've been in our generation, that's for sure. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, you want to understand the option market, option strategies, decay, futures, great program, 11 to 12 Eastern Standard Time every trading day. If you haven't test-driven yet, the Thinkorswim platform, so easy to do. You're on the website right now. Just hit the banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Tom, you're right. That is a record for home sales, for pending home sales. That is since they started measuring, that is a record. That being combined with the ADP number we got out this morning, pretty solid economic data here. And Mnuchin and Nancy Pelosi hinting about getting closer to a deal. And this market goes from red to green, guys.
Yeah, no doubt. And the quote here, folks, with Mnuchin, there was no doubt that was a very positive quote. The first quote out, let's see, Mnuchin said he sees one more chance of securing a deal with Democrats on another fiscal package. So, bottom line, that's quite a quote. You know, we'll see.
It appears that the rhetoric means they're getting closer.
Yes.
And this market will grow frustrated if we don't get progress and we don't look like we're getting it. We are green because not only the economic data is good, but that is what's lingering on top of this market. So we'll react positively to good news on that, and we'll grow frustrated if the news starts to slow down on that. Guys, that's just my opinion.
No, I mean, we have like a couple economies here, Kevin. You know what I mean? I mean, it's like we know when, there's so many restaurants that are in such tough shape. And every time that, when I'm coming to work, I start looking at these small commercial strip centers. I mean, that's that's all Florida has, really.
Yeah.
Not wrong.
Right.
But do you know what I'm saying?
And Chicago, believe me, Tom, Chicago is flush with small businesses, small restaurants, family-owned places. So without a doubt, it's affecting Chicago as well.
Yeah. And, the bottom line, at some point, we'll see how this shakes out. But we need a little jolt. There's no two ways about that.
We need to what we need to do? We need to get people from where we are now to the end of this.
Yes.
Till demand can come back into the market and businesses can pick up. And we got to cover them till then. I mean, people complain about airlines and money going to airlines. I'm telling you right now, American consumers do not want to wake up in a morning where there's a significantly less airplanes and airlines than there are right now, because we're very, comfortable with even flying to little areas, regional places, and if we don't have that, if some of these carriers start defaulting, that is not good, and people will feel that in their comfort levels.
Well, you'll feel it. And, folks, if you've ever been, you don't even have to be in a third world country. But the bottom line is that I've been plenty of places, man, that you got to wait a couple days for a flight. So that's a whole different ball game, man. Do you know what I mean? I think COVID has showed us, how much we've actually had it made and how much we've actually take for granted sometimes, Kevin. Do you know what I mean?
Exactly right. If anything, just the health club. I mean, what really hit me the most is the health club, and how that's changed. And so there's just so many parts of our lives that have changed. Sporting events, I mean, you just name them and they've changed. So think about this. Chicago residents, and I'm just pigeonholing here for Chicago. There's a chance, now it's a small chance, that the Chicago Cubs might play the Chicago White Sox in the World Series this year.
Okay.
In Texas.
In Texas. Oh, that's so sad.
It wouldn't be in Chicago.
Right. Wow.
And imagine, and that's throughout sports, right? I mean, just the Midwest, the Big Ten hasn't started playing it. There is catastrophic changes to our daily lives.
Oh, yeah. Hey, listen, we just won the Stanley Cup, and the bottom line is that,
both nations.
We just missed all of that whole week of Fan Fest and everything, right?
Yeah.
Right. And the amount of businesses.
That is a shame.
Yeah, because you think about the amount of businesses that are around Emily Arena. I mean, just like Chicago, Kevin, you know what I mean? It's a big day. It's a big weekend when that happens. Do you know what I'm saying?
Think of the bars and restaurants and small businesses that would have benefited from a Stanley Cup 7-game series, at least 3 or 4 being in, Tampa.
Yeah, no doubt.
Yeah.
No doubt.
And that's everywhere going on in some way, right?
Yeah. So what are we looking at out here today, Kevin?
Well, I mean, guys, we are near the end of earnings season. So what we're doing, we just continue to trade names that are in the news.
Yep.
And they're making decisions on that right now because, let's face it, our cash tag today, we're going to be looking at Uber and how Uber is all the news that's come out on Uber, like Folio's got some data, we're going to be looking at Uber and DoorDash and deliveries and how that has really saved Uber in terms of, they're not delivering people, but they're delivering everything else besides people. So like Folio will have some great data on that. And, we're going to trade this stuff up. I mean, the markets are still open. We're in that chasm between the end of earnings season and the beginning of the next one. So we got to figure out some things to trade, but there's always something to trade, guys.
No. And, that Uber news out of London was pretty big. I mean, 18 months is a long period of time, in order to basically build businesses, build relationships, right? I mean, that's a long time. It seems like
London,
Uber's pushing
Tom,
away
is their
from Lyft.
biggest European business partner.
Yes.
Is London. So to have that back online has got to be positive for Uber.
Oh, yeah. Yeah. And, it's so funny is that when I always thought of Uber, I always thought of Lyft, and I take Lyft a lot. But I can see mentally myself, I'm just thinking of Uber now. It's just funny, man. Do you know what I mean?
I ordered Uber Eats last night, so it's not. There
Guys,
you go. Add that to the
last
Folio
day of the
social
month,
boom.
last day of the quarter trading. Might get a little crazy around 2 o'clock. Between 2 and 3 Chicago, between 3 and 4 Eastern.
Ride 'em, cowboy. Right here, folks. 45 minutes from now. Kevin, have a great one, safe one. We look forward to the show.
Thanks for having me on, guys.
Stay right there. Tommy and I come right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now are trading up by 377. We get the Nasdaq up by 121. S&Ps are up 27. And folks, as you do come over to our website at TFNN, you are going to see right on the front page under featured content, you're going to see Rocket Equities and Options. That's Tommy's newsletter. You can test drive this. Bottom line, what month? 6 months, a year. It's a 30-day money-back guarantee. 1 month's $97. 6 months is $499, which is a savings of $133 at 22%. A year is $785, which is a savings of $379 at 32%. All with a 30-day money-back guarantee. Check it out. Bottom line, Tom O'Brien, I mean, you got this option market nailed down here. Tell me what you were doing here with this Micron last night.
So we've had some good trades, man, and this one's starting off well, right? So it's an option trade, and to bring people into what we did last night at about 20 minutes till 4, initiating a credit spread. So you had Micron trading at about $50.86, okay? So we decided to absorb some premium above the market. We sold a 51 call. We capped our losses by buying a call back at a 55 call. We were able to receive a $1.31 credit by doing that. Now, our risk, we open up $4 of risk, right, from 51 to 55, because really somebody else is going to have the right to buy it from us at 51. We're going to have to buy that back at 55, and you'd lose $400. You make up the 131, so you're risking about $270 if it climbs to 55. And
okay.
There's your, look at the blue line here on this chart is what to pay attention to.
Yeah.
And you're making a max profit of 131. If it stays under 51, your break even becomes 52.31. You take the 51, you add your credit onto it, 52.31. And realistically, you're looking for either flat action or negative action on their earnings, all of those expiring on Friday. And Micron, man, to pull up Micron on a daily, right? Micron, I mean, in the world of microchips, struggling here as they're at about 50. They were at 61 pre-COVID. You pull up a chart like Intel. Oh, no, that's, what am I, AMD even? What am I looking at? Yeah, there, AMD accelerating. Either way, coming into Micron, they were priced for decent numbers, and there was a lot of volatility priced into it. So we go for a credit spread.
Prior to that, yeah, right. I get it, right.
And to pull it back up, you go for a credit spread. And so you're risking $2 to make $1, but you're trading at 50.86. I mean, a $5 move is a 10% move. And even there, you're not quite at your $55 range almost. You know, you're right at that level. So you really had a lot of volatility and, you know, and going into this, right? The market as well looking a little dicey. So it's always nice when you might, you know, you're sitting at a price point that we have the VIX have elevated. And I like the idea of opening yourself up to negative action. The market maybe have negative action, and you might run down about 5% today. So as long as it stays below 51, that would be by Friday is what we'd be looking for.
Nice. That's a beautiful thing. Yeah, totally. And, you know, what's intriguing is that Micron, I mean, it's a strong stock, but it's been a consolidation since 2017. So it is pretty intriguing. I just brought this up, and it's like, okay, you know, these chips have moved. There's no doubt about that. But then when I look at it on a longer basis, look at this thing, man. I mean, you know, you broke out in, what's that, October of 2017. That's where we are. So,
yeah.
Pretty wild, man.
Yeah.
Oil, right? We're going to have oil numbers coming up today.
Oh,
Is that right?
Sure do. We sure do. So Wednesday, oil numbers.
So let's see. We got crude oil inventories. They're looking for a draw of 795,000. Survey numbers, build of 10,000. No, 100,000, I guess.
1 million.
Is that a million? Yeah, it's a million.
Yes.
Okay, so let me see this thing. CL active contract. So that downdraft yesterday when we were on the air, that almost come out of nowhere, except the Saudi, not the Kuwait ruler passed away. Down. Okay. You know, the force is down. There's no doubt about that, man. But, okay, so they're looking for WHIS. So if I'm looking for lower price, I'd be looking for a bigger build, right? Yeah.
Yeah, and interesting that you have the whisper in negative territory.
Yeah. Okay, I'm going to go for, give me a number.
Go for one. Go for it. I don't know. See, I might be looking for like the other way. You go for a number.
Okay, no. Then here, give me a number. The other way is fine. Go ahead.
Go minus 2 million. Minus 2,000 in there.
That's it, right?
Yes.
Okay, here we go.
And that doesn't necessarily mean the price is going to go up, but
I'm with you.
you know, coming in. Yeah, and oil seems, I mean, it's interesting putting this line chart that I have, you know, 41.05, that was the low back in March of before the Saudis came out, slashed the prices. Oil really started its escalation to negative areas. 41.05 was kind of the high of that gap. And it's just kind of been like comfortable where it's, you know, seeing it trade above that price level is something that doesn't quite seem comfortable with, but kind of just sitting at $40 right now.
Yeah. So Dow's up 377, Nasdaq's up 133, S&Ps are up 28. You know, the debate, bottom line is that I think we can basically discount debates going right into the election. I think it's going to be the election because the debates aren't going to get anything done. It's just, you know, we got zero information.
It devolved
and I don't
quick,
think it's going to change, folks. No one's going to be able to control Trump out there. I don't care what, you know, moderator gets out there. So
yeah, there was not much Chris Wallace could do last night.
Yeah,
so.
no, that was.
He stopped it plenty of times and tried to get a hold of things.
Yeah,
not much you can do when the sitting president.
Exactly, exactly. Yeah. So the election coming out, it is pretty wild that it sold off after. It's like, okay, well, Europe wasn't even opening at that particular point, but guess what? We just
no.
You know,
I speculated, and I'm not even sure. Maybe it was just. You know, people selling at the end of it. But, you know, that is when they talked about the election security and talking about, I mean, I think that was a real glimpse in terms of what happens at a close race. That you have the president out there talking about fraud and stealing the election, and that not maybe the best note the market wants to end on, because even if it's an outlier risk, that's a risk, you know?
Yeah, one of the Tigers had a good idea, folks, so that you put them both in the plexiglass, and you just don't. You get the control of the mic, and you hit the mic.
I wonder, we should try and, I wonder, because they go through negotiations of the stipulations for all of this stuff, and I imagine that Biden would have been fine with Trump not being able to cut him off. And I imagine Trump would never be okay with that in the same deal as that negotiation came down.
Yeah, no doubt.
Yeah.
Let's take a look at some of the high volume equities out here today. And yesterday, folks, okay, you talk about a low volume market. It was tremendously low volume. Today, you get Apple, that's the king dog up there. That was quick. That's up at 223. You got Micron Tech down 247. Tesla's up $12. You got United Airlines up $1.16. Wells Fargo is up $31. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 373, Nasdaq's up 134, S&P's up 27. We got a question, Tom, about the dollar here. So the dollar's giving it up again, folks. Pretty amazing, actually. And you can see this is a fast sell down on the last 10 minutes out here. We just went from that 94,190 to 93,876. Now, it's the 90, I think it's 93,991. Let me see this number here. Yeah, it's 93,991 that gets you in the lower range. So we'll see how this shakes out. And we do have our man Teddy Kegstack coming on, so we'll be talking with him, of course, about the dollar.
Nice.
Yesterday, it was the euro that was basically putting pressure on the dollar, and it looks like, the euro's flat out here. And you got, let's go look at the British pound.
And I think I had a good guess. We got to get back to oil.
Oh, cool. Oh, sorry. Here. Oh, I love it.
I saw a headline number come out at minus 1.98
Oh, look at
million.
here it is. Administrator. Oh, my God. You're the champion. Oh,
There
yeah.
we go.
Oh,
Get my trophy ready for that 2 million decline. But what's crazy is that we're sitting flat right now at 39.44.
Now you got to get a trophy, too. I love it.
There we go. I love it.
Okay, man. Congratulations. That's freaking awesome,
Thanks.
man.
Decline at 2 million barrels, and the market, that's what I put in, right? That's what we put in, and they're looking in for, and it came in at minus 1.98.
Okay,
I think I have it.
Wow, see.
You're in the.
You have it?
No.
Okay,
I mean, that's what I had just looking at Twitter, but I don't like to get everything from.
Yeah, I get it. Here we go. Let's see.
There you go.
Top live.
Yeah, they fell 1.98. Perfect.
Wow. That's awesome. Look at that. Gas, okay, so crude, the draw was 1.980. The estimate was 1 million. Gasoline is a build of 683,000 versus a estimate draw of 1.4 million. Distilled minus 3.1 versus an estimate 1.2. That's interesting there because
that's a big one, yeah.
Yeah, that is a big one, man.
And crude not really moving. That's kind of what I was thinking, I wouldn't have been trading off it because the market is pretty kind of pegged, man, in terms of there's a lot more riding on crude when you're talking about the economy. A stimulus bill or something like that, right, versus, especially a stimulus bill that keeps the airlines going for the price of crude versus those which are highly driven by the production in there, too. But there must have been, I was figuring maybe the number last night was more negative than the estimate originally. That whisper number a little negative. So perfect.
Well, you can see that, we have plenty of energy, man. When you get a draw of the 1.98 and oil doesn't move, that's saying that, guess what, man? They can turn that spigot on anytime they like. So
yes.
Yeah, there's no two ways about that, man. We take a look. Let's go and look at the 30-year for a second. USZ, because they've really been moving sideways. You get a few days that you get something happening, today, no doubt, is one of those days. That being said, though, it's like there's not much movement in these bonds, man. On a daily basis. Let's put it that way.
Oh no, I agree.
Yeah,
it's I on my chart. I'm just going to pull it up. I mean, I had this bar, I think, going back to like early July, is in 139.22, man. It's like stuck there, and it seems to be within 5 to 10 ticks of it, just depending on what side it wants to be on a given day.
Yes, no doubt. So let's go over and take a look at a few of the housing stocks. So what we had out here, folks, is that you had, which totally makes sense, okay? Let's see, I'll do it this way. We'll get Lennar, we'll bring up the news. And
Number 5 is the story right there, though.
I'm sorry? Did I already have it?
I was saying the stories was right. Your screen's stuck on me, but I had it. It was up on the top news.
There it is. We got it. Okay, so U.S. pending home sales rose more than expected in August, reaching the highest level on record. On record, by the way, folks, is only back to 2000, I believe. I don't understand why the records don't. They just haven't done it, I guess. Well, yeah. This is the 4th monthly gain for the index, which is now at the highest level and records dating back to 2001. Like, why do you only have records 2001?
Maybe they didn't have that index or something. I'm just looking at the index of surge. What index is it exactly? That's probably what
I don't know.
That index was probably.
Yes.
There you go. National Association of Realtors Index of Contract Signings.
I see. Okay.
To buy previously home.
Yes. Someone's going to do this work, and because you can get.
Yes,
you can go
could.
register
I'm sure.
deeds, folks. I was going back. You know what I was doing yesterday, Tommy? I was going back to Boston, and I was going back when I was in my 20s, folks, what I used to do in Boston, I loved the Registry of Deeds, and I'd go in there and hunt all these things. And in Boston, we're really lucky between the Registry of Deeds and the library. It's just a great place for research. But yesterday, I was going back in to the Registry of Deeds in Boston, Suffolk County, just researching some deals, because what had happened, folks, is that we're in St. Pete, and St. Pete is basically getting gentrified like South Boston did 35 years ago. So I was just curious as to the correlations, right? And there's some sick numbers. I mean, we know that I don't even know how people afford Boston anymore, but they do. But the numbers are crazy, man. They are. Yeah, it's, the first house, and this is what I was looking at. So the first house I bought, folks, was in 1970. I bought it at $14,000, right? That house is $1.5 million right now. Think about that. Isn't that sick? There's 3 floors. What has happened in South Boston, that's where you can get the value in it, because then they separated the floors. You know what I mean? Yes. You don't buy a house anymore. You buy a floor. And
yeah, they're basically 3-unit condo.
Exactly.
Yeah.
And they're still, an 1890 house, except that they have new appliances.
Sure.
Oh, man. So, here, let's stay with that. So, Lennar, folks, Lennar's breaking out right now. Lennar, you get, you're up 218. You get a B point up here of $80. So it's going to get interesting, man. Looks like it's going to be an ABC structure up. Oh, it's going to be close, actually. No, it's not going to be, because you get too much volume up there. Yeah, it's never going to do more than, well, I don't know. Maybe we'll do more than 7.4 million. That'd be hard to do. But needless to say, that's all about interest rates. And it looks like we're going to be here with interest rates for a while. So.
It sure does.
The squeeze is going to be on. I mean, that's how this thing is shaking out,
And that last volume bar you were looking at, I'm pretty sure that was their earnings. And it was pretty strong earnings, but they got punished a little bit on that day, but they're now back above where they were at. But that was their earnings, I think, on the 15th.
Yes.
Yeah.
And they sold them down. I know. 79 was the high. Sold them down to 74, closed out at 75. And that's just how deviant markets are, folks.
Yep.
Yeah. Are they going to buy it or are they going to sell it, right?
And it'd be interesting to see what happens with this aid package, man. If it's possible, if it's rhetoric, I would say, of course, if they're chatting, they're going to say it's possible. We'll see if they can actually find a deal that the president will agree to, and then Republicans in the Senate will agree to, right?
Yeah. My take is that it's not going to happen, but
it's very difficult.
We'll see where it goes, man.
I hope it does. We got big
we
layoffs.
need it. I'm not. Listen, man.
Disney, Shell. I mean, that's hopefully it stinks. Yeah. That's what it takes. But tens of thousands of layoffs, they're coming.
Yeah. Stay right there. Tommy and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials are up 393, Nasdaq's up 130, S&P's up 27. Let's go over to our man, Mr. Teddy Cakestad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy, folks, every trading day at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Cakestad, who's selling the dollar?
Well, I'll tell you what. I think it's a lot of people that are going to get really screwed very shortly if they're selling the dollar right now.
Okay.
So, since last week, there's actually hasn't been much of a change in the dollar. The dollar topped out off a nice little rally last Friday, and now it's coming back a little bit. But it's coming off of higher move highs. So it's made higher move highs, higher move lows. That's indicative of what? A positive trend, right? So, and I think that, we had these, nice patterns that's really touched off the strength in the dollar in the short run from these head and shoulder patterns that happen in multiple crosses versus the dollar and what have you. But the interest rate markets, we've been talking about for the past few weeks about how there was a disconnect, and that was kind of what helped build the head and shoulders and give strength to the dollar because of the disconnect between the European interest rates alone and then also like our short-term and longer-term interest rates.
Okay.
And you can really see how, just like how it put a stop to the dollar bears, just a few weeks ago. The dollar has been trending stronger for the past basically month, So for us to be coming off right now, what's happening? Think about this. The market had been trending. The dollar had gotten buried for months and months and months. So all your indicators were oversold, overbought, what have you, whatever. Now you had all these head and shoulder patterns and other new wave patterns that have confirmed a short-term corrective move at least. Okay. So now you have your indicators where, as they have finally crossed, some of your longer lagging ones are coming in. So this is the corrective move right now. So this is a bearish move for the dollar. It's a short-term move. And the reason I say it's short-term is because now we have the situation where you're getting the trap in the interest rate market. You look at the 30-year today versus where it was yesterday, and you look at the 10-year. Okay, now you guys watch the interest rates just like I do. One thing that tells me is that, we've been talking about this, look to buy dips in the bonds and the short-term interest rates. Now, the short-term interest rates have been relatively stronger, whereas the bonds have been relatively weaker, So now they're at that level where how much lower can the bonds really go? The Fed's not raising rates anytime soon. We know that's not happening for at least a year and a half.
Right.
So now this is the bearish little trap. Everyone's going to get bearish to bonds. They're going to start, yields are going to go up. We're going to get bearish to dollar. Well, no, that can't happen. That's what restricted the euro and helped the dollar finally bounce, was because of the euro shots, the euro bobble, and what have you. As those yields had started to go up, they can't maintain that, especially, and they're still in QE, God knows what right now, So now you're having that situation where the interest rates are they're basically at their limits. Like today, the bonds are down. What is it? Like I think right now they're down a point, like a one handle.
Yeah, it's one handle 86. That's one of the biggest moves we've seen in the 30 in a long time, man.
Right.
Yeah.
But now think about this. So the bonds are down basically 37 ticks on the day. Okay. Why is the 10-year only down it was down like 9 ticks earlier, but right before we started the conversation, I think it was only down 6 ticks. Now, as an interest rate trader alone, if the bonds are down 37 ticks, the 10-year is not down 6 ticks. It just doesn't happen. You know what I mean? The 10-year alone should be now down like around 15, 16 ticks for sure. Okay. So the fact that that's staying high, meaning the yields are going back down, and because means the long term is stretching. So that spread can't stay that way. Okay. Where you just got through rollover, the D's contract is now starting to become the main contract.
Yeah.
You're going to see that bounce. Okay. Now, when that bounces, that's when the dollar bulls come back. Okay, so this is just a short-term little correction in all those markets. So the interest rates are getting that little sell-off. The dollar's getting a little sell-off. You're seeing a little bit of a reprieve there. But this is just a little pause before it goes back to the trend, because the trend is your friend. I mean, the dollar right now is making higher move highs and higher move lows. The interest rate market as a whole is doing the same thing. So this is just a short-term little thing. I mean, unless the Fed's going to come out tomorrow and say, you know what, we're changing our policy, we need to raise rates. That's not happening, Right. So the dollar itself, I think, has to remain. Now, like I've been saying for the past couple of weeks as I was looking for this turn, I'm not a raging dollar bull here by any means, but we are at that level where forget about the elections. This has nothing to do with geopolitical stuff now. This is a technical thing, I mean, money can only stretch so far,
So what do you think about the euro right now, Teddy?
I think the euro right now has a downside target of around $1.15.
Okay.
I think that the only way, what was the low or the high? What was it? 118. If we get above 118 again, 118.5, then that would change everything. That would have us in a new.
Yeah, it gets back in the bigger range then, right? Yeah,
right. Then I could see us going back to challenge the 120 area.
Yeah.
But right now, I honestly have to say that unless the dollar index takes out it starts to make newer move lows, like the low that was set, a week and a half ago.
Yeah.
So unless that happens, I cannot possibly see the euro sustaining any rallies, and especially with the interest rates. So unless we start to see some major interest rate moves, then that could fuel a disconnect there where you could see the euro back up at 122, 125. But I don't see an interest rate move happening like that. And with gold and the metals markets coming off their highs and not really looking to make a run for higher move highs right now, where are you going to get that momentum? So I think that we're either range bound or definitely range bound to lower when it comes for most currencies versus the dollar. I mean, it's kind of odd today, like most of the currencies are strong versus the dollar, but the Swiss and the yen aren't. How is that possible? You know what I mean?
What's so intriguing is that the amount of debt that, and, folks, many times you go through the years, you say, okay, Greece had debt, Euro has debt, we have debt. Everyone has debt now. I mean, so much debt is incredible. It's like, how is interest rates ever going to go up? I mean, I know there's no such thing as ever, but you know what I'm saying? It's like, hey, man. Yeah.
Right. Absolutely. It's not happening anytime soon. So right now, that's definitely going to affect the currency markets. And now, if there's a big rally in gold and silver, and oil gets a big move, well, then maybe, because then you could have something that might help to fuel another break in the dollar severely,
right.
But I don't see that happening anytime soon, especially with the way the interest rates are. I mean, right now I'm looking for the right pricing now in the 30-year to start to buy the dip, because I can't stay at these lower levels. It just, well, obviously it could, anything can happen, but with the way the contractions and the way the interest rates move, those spreads, someone's going to jump on those. You don't have those disconnects for very long,
No, and you know what? That someone could be like in the next 30 or 40 minutes, man. I mean, this is a one-way move down out here this morning, folks, okay? It started at 8 o'clock this morning, and, you had that big downdraft that just as I brought, actually 20 minutes before Teddy came on. And now it's just laying there. Like, there's no, right now, you don't have a buyer, but you don't have a seller right now in that 30-year either,
Right. Volume. That's the thing, is volume is not that high.
Yeah.
So that's the other thing. When as this stays with these disconnects, eventually big volume is going to come in, and that's going to set the move, set the new trend.
Well, listen, man, it's always a pleasure. You have a great one, safe one. The next time we're talking to you, Teddy, it's going to be October. How's that?
I know. How about it? Congratulations on the Stanley Cup win.
Thanks, man. Yeah, totally. Have a great one. Have a safe one, man.
You guys take care.
Stay right there, folks. Tommy and I come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profit in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Well, Tom, I suspect, this afternoon could get really interesting. I mean, the House is going to basically get this bill on the floor, and then the real question is going to be, what does Mnuchin say after that? Because the bottom line is that the market has some hope at this particular point. And we'll see.
Especially, I was just going to add, it's especially because we're so far even off the lows. The market was down a full percent, right, overnight?
Yes.
And now we're up. I mean, we're 70 points off of the lows last night in the S&Ps, man.
70 points. That's amazing, man.
Yeah.
And what happens, folks, is that we all get used to this. I mean, I remember this during 2007, 8, 9. And take advantage of it, because it stinks when it comes back that the S&P only moves 5 points a day, folks. Okay, it's nice when it moves 20 and 30 points, because guess what?
Sure.
You get fast fingers and whether you're going up or down. The bottom line is that, as long as you don't decide to go for home runs, there's plenty of single and doubles in a market that runs, in this particular point, 58. I think it's 58 points up and down, right? Yeah.
Yeah, it was. I mean, even overnight, it was like 67 points down versus we've now made it back that plus some, over 70 points. Yeah.
And then, Apple, bottom line, take a look at Apple. You get a sideways move out here from the way down. You don't have any juice behind the move, but guess what? Apple being up $2 is a difference. If Apple goes from $2 to flat, watch out NDX 100, so.
Strong stocks. I mean, Walmart. Check out Walmart as we wrap it up, man. From like 137 up to 139.31, up 1.5%.
Look at that.
There's some.
Yeah. And then, you know what? That's right. That's end of the quarter too. It's end of the quarter today. Yeah.
Yep.
Stay right there, folks. Think of some coming up next. And I'm Matt Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at it.